Dow Jones futures fell 150 points ahead of Tuesday's open after the Nasdaq hit a new bear market low Monday. Meanwhile, the third quarter earnings season was kicked off this week with results from Dow Jones stocks JP Morgan JPM, United Health, UNH, and Walgreens Boots Alliance WBA. So this video we are going to tell you that Nasdaq hits new low. What next? The video is going to be amazing, so make sure you stick to the end. Before starting the video, be sure to smash the like button and subscribe to never miss out on any of our videos. On Monday, the Dow Jones Industrial Average declined 0.3% and the S&P 500 lost 0.75%. The tech-heavy Nasdaq Composite sold off by 1%, and the small-cap Russell 2000 shed 0.6%. Among exchange-traded funds, the Nasdaq 100 tracker Invesco QQQ Trust (QQQ) moved down 1%, and SPDR S&P 500 SPI dropped 0.8%. U.S. automakers Ford F and General Motors GM received downgrades from UBS. Ford skidded 6.8% after being downgraded from neutral to sell. GM stock declined 4% and moved from a buy rating to neutral. A potential serious recession on the horizon has some analysts worried about shares of major automakers. Cardinal Health CAH, ConocoPhillips COP, Denbury DEN, and Vertex Pharmaceuticals VRTX, as well as Dow Jones stocks Chevron, CVX, and United Health, are among the top stocks to watch. Keep in mind that the ongoing stock market correction is a time for investors to sit on the sidelines and build watch lists of top growth stocks. Cardinal Health and Vertex are IBE leaderboard stocks. Chevron and Conoco were featured in this week's stock near a buy zone column, along with two other top stock ideas. U.S. stocks fell Monday, continuing a stretch of volatility as concerns about Federal Reserve tightening, escalation in the Ukraine war, and China trade policy shake markets. The S&P 500 turned lower after opening with slight gains, shedding 27.27 points or 0.7% to close at 36,1239. The Dow Jones Industrial Average edged down 93.91 points or 0.3% to 29,202.88, while the Nasdaq Composite fell 110.30 points or 1% to 10,542.10. That is the lowest closing value for the tech-heavy Nasdaq since July 2020, according to Dow Jones market data. Shares of chip manufacturers suffered losses stemming from the Biden administration's new restrictions imposed on semiconductor exports, aimed at hampering China's military. The PHLX semiconductor sector dropped 3.5% on Monday to its lowest closing level since November 2020. Those losses also helped drag down stocks for businesses that are major chip users. The new restrictions placed on selling semiconductors to China are a big reason why we're seeing the downtrend in those stocks, said Randy Frederick, Managing Director of Trading and Derivatives at Schwab Center for Financial. Technology stocks represent about one-fourth of the S&P 500, noted Mr. Frederick. Chipmaker Qualcomm sank $6.31 or 5.2% to $114.60 on Monday, while Broadcom fell $22.78 or 5% to $437.70. Technology was the worst performer among the S&P 500's 11 sectors, down 1.6%. Shifting expectations about more interest rate increases from the Fed have been the primary driver of recent stock swings. Friday's jobs report showed the labor market is still tight as the unemployment rate fell back to a half-century low, exacerbating concerns that the Fed could tighten financial conditions more aggressively. Hopes for a Fed pivot, in which the central bank would pause interest rate increases and jolt stocks higher, have largely been dashed. Traders now expect the benchmark federal funds rate to touch 4.7% by the second quarter of 2023, according to FactSet Derivatives data, more aggressive than the Fed's forecasts. Earnings season is picking up speed, with household names in the consumer and finance sectors set to report this week. PepsiCo is on the docket for Wednesday, and Delta Airlines, Walgreens Boots Alliance, and BlackRock will give updates Thursday. JP Morgan, Wells Fargo, Morgan Stanley, and Citigroup will report on Friday. Everyone is expecting a poor earnings season, but quite a lot of that is already priced in. We're expecting downgrades and guidance coming down, but that still doesn't mean we can't get negative surprises, said Esti Dweck, Chief Investment Officer at Flowbank. Overseas, the Pan-Continental Stocks Europe 600 fell 0.4%. The Bank of England said it may increase bond purchases that are part of a market-stabilizing operation and put forward a new repo facility for banks. UK government bonds sold off. It's a credibility issue. The bank said it may or may not buy some bonds. Doesn't deal with that, said James Eddy, an investment manager at Aberon. The British government sparked turmoil in UK markets in recent weeks with an unpopular package of tax cuts. Also, the closer we get to the date this program is due to end, the more nervous investors holding long-dated gilts are going to get, Mr. Athey said. The program is set to end on Friday. In Asia, most major benchmarks declined. The Shanghai Composite Index fell 1.7% and Hong Kong's Hang Seng dropped 3%. Oil prices slipped with global crude benchmark Brent trading down 1.8% at $96.19 a barrel. Traders said they were focusing on the coming inflation data and what it could mean for Fed policy. U.S. bond markets were closed Monday for the Columbus Day holiday. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Do not forget to subscribe to our YouTube channel. Stay safe, and we will be back soon with another video.